Hello, vetted VA community. It is Hammer. Today is April 12th, 2023, bringing to you this week's mortgage market update. Today's guest, I'm proud to call him a friend. He probably wouldn't call me one, but I call him one. Sometimes it works that way. We got Michael Wolff on. Michael, please go ahead. Tell everybody a little bit about yourself.
Michael Wolff. I am a mortgage broker here in Raleigh, North Carolina. I've been a loan originator since 2004 and pretty much been in the broker channel since 2005. And I've been with Vetted VA for, like 2 years, more than 2 years. It's been a while. So I run a branch here with my friend Mike Alberico. He's another moderator, Vetted VA. And just love the East Coast, love the Raleigh weather.
Yeah, now that you're in the East Coast, right? Because you came from California.
Oh, I lived in California for 20 years, but I'm actually from the Northeast, from New York. And
that's why I like you, the New Yorker in you. So, all right. Well, you guys know how it works. If you have any questions or comments, let's hear them. If you're here live, go ahead and say hello. Let me know what group you're in. It looks like we've got someone from our Vetted VA community. We've got someone from the Vetted VA professional community. So let us know that you're here. Say hello in the comments. If you have any questions today, certainly feel free to post them out there so we can answer them. If you're watching on the replay, give us a hashtag replay. I know many of you can't make it live, but you do watch on the replay. We'd love to know when you're here. If you have anything that I can answer for you, make sure you tag me as Hammer. Otherwise, you can tag my friend, Mr. Michael Wolff, as well. And great to see you guys. So let's go ahead and let's start off with what we talked about with rates and what we talked about last week. So I'm going to throw that up on the screen. Remember, when we talk about rates, this is not an offer to lend, and we're always talking about rates and averages and generalities. You always want to make sure that you're shopping around and shop your rate. And if you have questions, you can always ask them in the Vetted VA community and know that you're going to get truthful answers without any horses in the race. So with that said, last week I said rates were currently in a position to improve. They had a bias to improve, but that we would need some help from jobs data and some other economic reports. So I'll talk about if that happened or not. I also said next week's inflation data, which was today, could help rates improve further, and that we could see sentiment shift quickly. So that's kind of the main gist, is that depending on which direction markets were thinking things were going to go, we could see some movement very quickly. So what did happen is that we actually did see market sentiment shift. And when I say market sentiment, mortgage rates right now, for those of you that watch on a regular basis, you've heard me say again and again that mortgage rates right now are really based on what the expectations are for a Fed rate hike at the rest of the year, the upcoming meetings. So in front of you is a chart from CME Group where they track what are called Fed futures. And basically, what are the probabilities of what we're going to see for the Fed funds rate at the next meeting and then the following meeting. So at the May 3rd meeting last week around this time, the expectation was that we were going to see the Fed pause their rate hiking cycle. And the Fed, if you remember, has been hiking rates since last March. And as they've been hiking the Fed funds rate, or their policy rate, as we call it, it has been pushing all the rates through the economy higher, including mortgage rates. So the Fed does not set mortgage rates, but they influence mortgage rates by how they adjust their other rates. So last week we were in a position where it looked like that the markets that were expecting the Fed to pause these rate hikes, this bar here on the left was much higher, and we had a much smaller bar on the right. Well, that sentiment shifted. So last week what happened is we actually saw early in the week, Tuesday, Wednesday, we saw rates were improving into Thursday. And then by Friday, though, they actually had started to creep back up a little bit. And these weren't big moves, but basically rates were in the high fives for VA rates. And then they kind of moved into the low sixes. You may still be able to get a rate quote in the fives. Michael, have you priced anything recently, for somebody in North Carolina with good credit for a VA borrower? What kind of a rate would they expect to see right now?
Yeah, I think we had an improvement today, like a nice one. We kind of recovered the losses from Friday and Monday, which is really nice. So we're back to where we were. I haven't priced one today yet, but I did price out an FHA borrower, which the rates are kind of similar to VA. And this guy didn't have the best credit scores, but we were in the upper fives with a very modest cost. So
okay, yeah,
makes sense to consider that.
Yeah. So if you're currently thinking about locking in your interest rate and you're given a rate quote between the high fives and into the low sixes, that's going to be, somewhere within that vicinity. So you know that you're not being taken advantage of. If you're not getting a VA mortgage for any reason, and what we call conventional rates, those tend to run a little bit higher. One of the benefits of getting your VA loan is that we do see rates are generally a little bit lower for it. Conventional rates have dipped into the low sixes and then kind of moved back into those mid sixes. Would you agree with that, Michael, or have you seen something different?
I would absolutely agree with that.
Okay. So, and then, as far as kind of a forecast, where do we think things are going to go from here? I think rates are very likely to remain stable. What I mean by that is we're not going to see rates that are pushing up into the sevens again. We're not seeing rates that are dropping into the fives. We're seeing rates on those conventional loans. They're going to stay somewhere within those mid sixes, maybe as low as 6.25, maybe as high as 6.75. And for your VA loans, you're going to see those high fives, low six areas. We're not going to see probably any big moves ahead of the Fed meeting that's going to be on May 3rd. And at that meeting is when the Fed will actually go ahead and announce if there is a Fed rate hike. And again, markets currently expecting that we're going to see a 25 basis point, or what that equates to is 0.25% of a rate hike. So right now, the Fed funds rate is 4.75. That's a base starting point for their policy rate. And that's, you may find like the prime rate, which is tied to that rate, and that's usually 3.25% higher. So right now, you're probably seeing a prime rate of around 8%. And you would see that prime rate go up to 8.25%. We're going to see that Fed funds rate go up to about 5%. And it's about a 70% probability that we're going to see that happen. Now, if we were to have some kind of economic data between now and that meeting, we're going to have a few different reports about manufacturing, and tomorrow we'll see wholesale inflation data, and we'll get some other things going on. But if we were to see something that persuaded markets that maybe the Fed isn't going to raise rates, and we would see mortgage rates maybe improve a little bit, but otherwise, if that doesn't happen, and it's not likely to happen, we're probably going to see rates that are going to stay very near where they're at right now. But just like last time, we could see that sentiment shift very quickly. And what I mean by that is if we get economic data that comes out showing the economy is doing very strong, then that's going to scare markets that maybe the Fed will be more aggressive in rate hiking, and that we might see a rate hike in the next meeting after May, which would be in the June meeting. So right now, markets are currently expecting that the Fed will basically be forced to pause hiking rates. We'll see one more rate hike, and then the Fed will pause hiking rates in June, and then be forced to actually start cutting rates as we get later into the year. Ending the year right now, markets believing that we'll be somewhere between maybe 4.25, possibly 4.5, or as low as 4%. But 4.25 is that leading probability right now. And that's what we see. So this is a chart that you guys can ask us about in the comments. Be glad to tell you all about it. But again, this is just tracking what we call Fed futures and the probabilities of future movements. And that very much is controlling where mortgage rates are headed at this point. So rates likely to hold near these levels over the next, couple of weeks. If you're out house hunting, I don't think you have to worry about necessarily qualifying at a rate much higher than today's rates. Over the next few months, rates will improve. It's just a matter of when. What we're looking for are signs of inflation improving, the economy slowing down. And then once that Fed starts to pause those rate hikes, we'll see mortgage rates improve a little bit. And then when eventually the Fed cuts those rates in order to stimulate the economy again after slowing it down, then we're going to see mortgage rates really start to drop back down. How low, Michael, though, do you think rates can actually fall? Even let's say 2024, do you think we'll ever see those 2.5%, 3% interest rates again? And why or why not?
I don't think we'll ever see them again. I mean, never say never, but I mean, it took a global pandemic and so much uncertainty in the market for the government to step in and kind of do what they can to stabilize everything to get rates that low. And, there's only so low rates can go before they're not really profitable to the lenders,
Yeah.
But I think it would take some kind of crazy activity to get rates that low. I mean, I don't think it's going to ever get that low. I mean, I think possible maybe we'll see fours somewhere, right? I think that's more realistic. If it gets lower, sure, that's great, and great time to refinance. But I think realistically and historically, I think somewhere in the mid fours is kind of like a floor, low fours maybe on a good day.
Yeah. Yeah, I agree with you. I think that that's very much what we're going to see. And again, the only reason we ever saw rates as low as we did was because the markets were being manipulated. The Fed had lowered the Fed funds rate to 0% and were buying bonds, mortgage-backed securities, and treasuries. They were trying to stimulate the economy, which we had shut down because of the lockdowns and all of that. So hopefully we never are in that position again, at least in our lifetime. And that would be why we aren't going to see that again. So, if somebody can't necessarily expect to see that go down, the question that we always get a lot right now is, do you think it's a good time to buy a home, and why is now still a great time to buy a home? As I assume you're going to say yes.
No, it's not a good time. No. No, I mean, buying a home, I mean, it's a place to live, but it's also an investment. Again, data. I look at data. That's what I look at. Not feelings, but historically, home values always go up. Rents always go up. So owning a home definitely stabilizes your finances. So is now a good time to buy? Well, I mean, if you need to buy a house, right? To you're tired of renting. You want a place to call your own. A yard for the kids. Like, now's a good time as long as you can find something that's affordable. I think people should not be kind of looking at the market as far as rates to be an indicator of when to buy a house, because then you're kind of chasing rate. And right now, at least in our market, there's still, and there will be for a while, an inventory issue. There's not a whole lot of product available. So today you want to buy a house because, the rates just dropped today. Let's go buy a house. Like, it may take you a month, 2 months to find it. And then as the rates come down, more and more people are going to be thinking the same thing. So that's just going to drive up prices. And even if rates are lower, you're probably going to still be paying more for the property. So yeah. I think it's just when the time's right, you'd like to buy a house. Maybe there's a need for it. Affordability, number one, always.
And then, I mean, that's probably, a lot of times we get that question and people say, well, are we in a housing bubble? And normally what would happen when mortgage rates go down, home prices go up. And we saw that happen. Mortgage rates were historic lows, true historic lows. And we saw, home prices that jumped tremendously and dramatically. I could come up with lots of adjectives, and anybody that was trying to buy a house saw the bidding wars and, cash offers and buying tremendously above the asking price. And it was very, very difficult to get an offer accepted. And what would normally happen is that when rates go up, we'd start to see home prices come down, because it all centers around what you said, Michael, which is affordability. What kind of a payment can somebody afford? And normally, and I say that word normally, home prices would come down as the rates would go up, because people are moving, and in order to get their house sold, well, they start off asking for more money, and then nobody's really is interested. So then they drop that price a little, and that permeates through the market. Each house affects the other homes in the neighborhood, and it kind of goes in those waves. That did not happen this time. Can you tell everybody why you think it didn't happen this time? Why did home prices not drop?
Well, what I'm seeing is, sellers don't really need to sell. I think that's one of the reasons why. I've talked to people who are sitting on rates in the 2s and 3s, and for them, like, unless they have to buy something new and sell, like divorce, death, relocation, then that's something else to consider as far as upgrading. Like, I would like an extra bedroom, but the house is going to be more expensive, but my mortgage is going to be 3 times the cost. So maybe I'm going to hold off for now. Maybe I'll just get an equity line and just, maybe just build something and maybe make do for a little bit. So that's one of the reasons. And on the other hand, there's also buyers who are thinking, I'm going to wait longer and maybe things are going to crash and I'm going to get a deal. But that's also, that's not going to happen either.
Right.
For the same reasons,
Yeah. And that's why right now, there's always a plus or pro and a con to these situations. Rates are higher, so higher payments, and higher payments suck. We all don't want to pay more. I get it. In fact, I'm getting tires on my Jeep today. Tires are going to cost me $1,500. Those same tires 2 years ago were $1,200. It literally $300 more expensive today. Do I want to pay that? No, but I need tires today, just like people need a place to live today. And at least some of the advantages to buying a home when rates are a little bit higher right now, there's less bidding wars. People are not going crazy over the asking amounts. We're seeing those seller concessions that people talk about. Can you just explain to everybody what a seller concession is and why they, that could be advantageous to buy a home right now?
On the other hand, during when things were a little bit crazy, sellers weren't giving up anything. They weren't dropping prices. They, which I mean, there's so much. But okay, seller concessions are when the seller has a little incentive to help people buy the house, or part of negotiating is they give some of the proceeds back to the buyer as a credit at closing, which can be used to cover closing costs, which makes it a little bit easier for a buyer to get into a property, or they can use it to buy down the interest rate. There's different ways to do it, temporary, permanent reductions, but it just makes it a little bit more enticing for a buyer to get into the property. During when things were, really a strong seller's market, sellers didn't have to do that. And like you said, buyers had to come in with big deposits, waiving inspections, quick closes, beating out by cash offers. And what's really crazy is here in North Carolina, I don't know if it's anywhere else in the country, but we have what's called a due diligence deposit on resale homes, right? Not from a new construction, but I buy a home from you. I give a due diligence deposit. That's not it's not an earnest money deposit. That's non-refundable. Yeah. Even for government, for VA and FHA loans, it's not refundable. So, that's a big risk for the buyers. But now when there's seller concessions, the deposits are a little bit less, things are a little bit more reasonable. So it's a little bit easier to get in the property right now.
Right. Yeah. And all of those good, definitely good points and good reasons why buying a home now is good. So what about that FHA 40-year mortgage I keep seeing on Facebook? Should for our consumers out there, should they be looking to get a 40-year FHA mortgage? And this is a trick question.
Yeah. I don't know why you're bringing this up, man.
because there actually have seen some people that have asked about it. If they've heard about that legendary 40-year mortgage, the 40-year FHA mortgage is not for buying a home. It's not for purchasing. It's something that the FHA has put out there for what they call loan modifications. If you need to modify a loan that you're already in. And the reason they're doing it is that people that are in homes who are maybe struggling to make their payments for whatever reason, it gives them something to help avoid, getting stuck in and getting thrown out of the house. Not eviction, but foreclosure. Yes. Helps them to avoid a foreclosure. So if you do hear anything, and I've seen some of the media articles, I've seen people commenting on some of those media articles, a 40-year FHA mortgage not available to buy a home right now. And if you're being offered one, it's because you're probably in arrears or struggling to pay your 30-year FHA mortgage. So this would just put that term out a little bit longer. So like I said, it was a trick question. Go ahead.
Yeah, no, and I think conventional loans, the reason why FHA has to make these big announcements is because they're, government insured and there's more to it. But conventional, a little more loose, I guess. And those lenders and servicers, like they've always had 40 or 50 or whatever terms on modifications. Like how can they keep people in the house, make it more affordable, not go into foreclosure? So that's always been around. So, the FHA one was just a new announcement, and some realtors, loan officers jumped on it right away, telling people it's a problem, but it's not. So be careful, people that are spreading rumors.
Misinformation. So, All right, everybody. Well, if you do have any questions, please go ahead and put them in the comments and we will be glad to answer them for you. Otherwise, as far as rates go, I'll just throw that up on the screen one more time so that we can go ahead in case anybody has a question on that. So it's up there, and then we'll look to wrap things up today. Remember, anything over the next couple of weeks, rates are very likely to hold near these levels. For VA loans, it's high fives, low sixes. For conventional loans, it's mid sixes. In the next few months, we're likely to see rates improve as the Fed does pause their rate hikes. And eventually, the expectation is that we could see a true recession coming where the economy slows down, unemployment rises, people get laid off. If that does happen, we will see mortgage rates that'll improve during that time. When that happens, of course, you should always talk to your lender and find out your mortgage professional of choice and find out about IRRRLs and refinances and all those good things. So, Michael, anything you want to leave everybody with before we wrap up for today?
Nope. The weather's great right now over here. So if you're in the Raleigh area, go outside, take a break.
Yeah, it's 60 degrees here in the mountains. So what are you at, about 70? You're usually about 10 degrees warmer than I am.
That's probably about that.
Yeah. So because I think if I looked, I think you're about 4.5 hours away from me.
Something like that.
But all right, everybody, we're going to wrap it up. We'll see you next week. Same bat time, same bat channel, 12 p.m. Eastern time, not Central time, as Michael knows. And in fact, let me go ahead and throw this up on the screen for y'all just so you have it. We do this each week, 12 p.m. Eastern, 11 a.m. Central, 10 a.m. Mountain, 9 a.m. Pacific. And we will see you then. Take care, everybody.
Bye.